Today, we're finishing up our conversation about things that financial advisors wished every investor knew before they even came into the office. We got 6 more good ones to go through today with Mike Koinen, so stay tuned. Hello, welcome in. This is Retirement Reality. I'm Ben George with Mike Koinen. He is the founder and owner and principal of Preservation Services, offices in Wisconsin, Minnesota, or whatever's most convenient. You'll find everything online, though, at principalpreservationservices.com. Mike, we talked about some things that we wish investors knew. Again, we're going to continue this conversation. But again, good reminder, you want to be working with someone that's kind of helping you understand these things, right? You might not come in the office and know everything, but you want someone there on your side to help make sure you're understanding everything about your plan.
Yeah, and I think it's important to work with somebody who specializes in planning, as if you're trying to approach retirement, not somebody who's just to offer you the next best investment. Thinks, oh, that investment's here, I can get you half a percent better yield per year than this on this mutual fund than the other. That's not what is planning. That's just here to sell another investment. Our goal is to make sure that all the pieces fit together: Social Security, pensions, RMDs, taxes, house, debt paid off, plan, whether it's retirement, trips and, leaving a legacy behind. Planning is so much more detailed, and even estate planning falls into there than just the investment piece.
Yeah, so that's kind of the next one we wanted to hit you with, is that it is much more than investing. So you've kind of covered that. If you want to learn more about that retirement reality roadmap and the process that Mike and his team go through, again, log on principalpreservationservices.com. All right. We also wish everyone knew that financial decisions are emotional. You can never take that out of it, right? We're human, Mike, so you can't take that out. And that's okay to a certain extent. It
is. It's good to not be so stoic, right? And just say, expect, and also be blindsided. You could be blindsided thinking that the markets are always going to be good. Or the markets, they came down, but they're going to come back up. You have to, put everything in perspective. I warn people, I tell people, look where we were 16 years ago, 2008. Or let's just go back to, 17 years ago, October of 2007, the market started dropping. I said, you didn't probably panic. These are the people who are coming to my educational seminars because you were 17 years younger. You had time to get your money back. If that happened today, could you handle that? Probably not. Even if you could, you want to go through something like what we went through in that real estate bubble from 2007 to 2009. So the key is to be realistic with that. Don't put the blinders on. It's okay to be emotional. Because this is your money. You worked your tail off for it. Just think of all those hours you put in to fund your IRAs and your 401ks and so on. Even those times where you didn't even know how you were going to save money, that you were able to put money aside and just put off the entertainment, put off the travel, put off this and that, just to have enough money for retirement. So you should be serious when it comes to that. You should be emotional when it comes to that. That's a good thing.
Yeah, no question. Another thing we wish you knew is that the value and the significance of having a diversified portfolio. I know people hear the word diversification, probably say they understand it, but I think it's a hard lesson a lot of people have to learn when they're not truly diversified.
Right. In diversification, it comes in two forms. The broker dealer world, we kind of battle against a little bit sometimes. They talk about a diversified portfolio is all you need, but they don't look at the big picture. We talk about a truly diversified portfolio is, what portion do you have in that risk bucket? What portion do you have for emergency funds? What portion do you have for guaranteed safe money? It's the bigger picture, not just looking at the risk only bucket. It's to look at all of them all together. So, and you want to be diversified. That's important, but you want to be diversified in the right sectors as well. Instead of just being general and say you should have a little bit in international and bonds and large cap and small mid cap. No, I think, why should you have to be in every one of those sectors year by year? Those should change based off of where the economy is at. So diversification is important, but also in the right sectors.
Yeah, so that's why you want to sit down with someone that does this every day. Mike and the team at Principal Preservation Services can help you with that if you want to actually truly build out a diversified portfolio. And I know a lot of people may not call or may not reach out because they think that financial planning is only for the uber wealthy. But I know that's one thing you wish people knew, is that you don't have to have a ton of money to benefit from planning.
You don't. And reality is you need it more because, hey, I love working with the wealthy as well. We have wealthy clients. But reality is, I tell a lot of times, I said, you'd probably be fine without me, but you could be better with me is what I tell, I show them. So I love working with the wealthy, but those who do it, those that are concerned that they don't have enough, maybe they only have a couple 100,000 saved, maybe they have a 500,000 saved. I'm not sure where that number is, but most people feel, and even a lot of the wealthy have come in and said, I'm going to run out of money, won't I? I'm afraid I'm going to run out of money, because it's a scary thing to stop contributing and start distributing your money. So the key is you need to have that plan. And I think you'd be surprised. Most people are surprised that we can show them how you can stay retired, maybe even retire sooner than they expected, and stay retired without the chance of running out of money when you do things appropriate. So the key is get that planning done, to look at it. Don't be so nervous and so ashamed of how much you've saved or little you think you've saved. And I also remind people, if you're one of those pensioners, you won't have as much saved as somebody who doesn't have a pension. So you can't compare apples to apples. If your friend never worked for a company or the government that offers a pension, well, they're going to have more money in a 401k. Their company's offering probably a match where you don't get a match if you're with the federal government for some of these plans. So you won't have as much saved because you have a pension. And that sometimes I show what those pension amounts are. I said that might be equivalent to another $750,000 if you had it in your 401k, or maybe even more. So the key is find out what you do need.
All right, a couple more here that we wish every investor knew. And Mike, one that I know that it's important for you guys at Principal Preservation Services, and that's reviewing, updating your plan regularly. These things need to be happening consistently. Mm-hmm.
Yeah, we use a software, retirement planning software that I've been using for over a decade, and has all of our clients' information in there. And no way in heck am I going to be changing that now, because we have thousands and thousands of plans for clients, and even people who haven't decided to come on clients, and we find a lot of them are coming back, a year later, 2 or 3 years later, and we have that information saved. So it's important to go back and review everything. So every time we do whether it's every year or every 6 months or 4 months, whatever that might be, everybody's plan is different, how often they want to have reviews, but we're updating those numbers and showing where they are in running new projections every time they come in for review. And it's just good to see that for this last 2 years, we've exceeded expectations and things look even better. So it's fun to show these numbers, and it's bringing a lot of peace to people. When you see these numbers, doesn't change, when they're going to run out of money, or it just increases how much more money they're able to gift. It's fun to have these reviews and keep showing that you're on pace and on track.
All right, one final one here to close out with, Mike, and we wish everyone knew the benefit of working with a fiduciary.
A lot of people throw out that term fiduciary. I will say I have the license to give advice, and there's certain licenses that have, and a lot of advisors might have that license, but they're not utilizing that. But they throw out the term, yeah, I'm a fiduciary. I'm putting your best interest first. But reality is they might just be a fiduciary to the company they work for if they're with a broker dealer. If they're selling you these Class A mutual funds, they're selling you variable annuities, these non-traded REITs, these high commission investments, we don't have the ability, nor do I care to even offer those as a fiduciary, because it doesn't benefit you. If you have to pay so much money at commission to pay me, how is that to your benefit? We get paid the same whether you're in a conservative or moderate or aggressive investor, anywhere in between. So we don't have that incentive to offer you a certain fund that's going to pay me a 5.75 load fee up front. That's just ridiculous. But how do you know? There's a video I like to share on them in the office that shows that about 5% of all advisors are true fiduciaries out there. I'm one of them. And because they might have the license to it, but the company they work for doesn't allow them to use that license. So they're not even being truthful with you when they say that they're a fiduciary. So it's a term that's been thrown around a lot, and people just like to say, yeah, I'm a fiduciary. But reality is you have to look at what licenses do they carry. Myself and the advisors in the office, we only carry the license to give advice, not the license to sell these commissioned, high commission investments, out there. So that's the key. And obviously we do planning. You come into our office, this might be a little lengthy here, Ben, but you come in the office, with $500,000, $1 million, it's going to be the third, fourth meeting before maybe you decide to come on board. You go to a broker dealer, they're going to invest that money right away. That tells you that they're really not putting your best interest first, because they didn't even put the time in to get to know you and to find out what is the best investment for you.
I love that. Well, if you want to learn more, again, principalpreservationservices.com. You can also call 855-987-8888 to get in touch as well. Mike, we have time for one question here from the mailbag that I want to run by you, and it came from Matt. Matt said, I stopped my 401k contribution several months ago because of election uncertainty, thinking I'd wait until the world got back to normal. You probably have heard this before from someone. But the market didn't crash like I thought it would. So should I just go ahead and start them back up?
Absolutely. Just take that as a learning lesson that it's impossible to time the market. Time in the market is going to be more important than timing the market for you. And that's for everybody. So I tell people, don't get emotional when it comes to these matching, these contributions that are going into your 401k. You need to just be consistently putting in, because the markets will fool you. And a lot of people were fooled right after the elections, or even in 2017 when Trump took office the first time, or 2021 when Biden took office the first time. A lot of people were fooled. So the key is just be consistent with what you do. Dollar cost averaging is at your, is working for you. That's, you're buying investments and averaging the cost of those investments. It'll work itself out. And if the market did drop, I wish you should have been even figuring, if you thought it was going to drop, you should have put more money in. So not to beat you down, but remember, you're also getting most likely free money from your employer. So that's a good opportunity just to stay the course and don't worry about that. Unless you're real close to retirement, then you might want to be making some changes. But if you're 5 years plus from retirement, just stay the course.
Yeah, no question. Even if it's a hard lesson to learn, you can move forward. Don't look back and worry about things that you didn't do financially. There's still plenty of opportunity ahead. So again, if you want to get in touch, I
appreciate you being vulnerable. Being vulnerable with that, question about, hey, I made a mistake. I appreciate that. So I think just chalk that up as a learning, so I won't do that again.
All right, very good. If you have questions for Mike, feel free to reach out. Again, principalpreservationservices.com. Thanks for tuning in to Retirement Reality with Mike Koinen. We appreciate your time. Look forward to talking to you again soon.
Thank you.
Investment advisory services offered through Alpha Star Capital Management, LLC, an SEC-registered investment advisor. SEC registration does not constitute an endorsement of the firm by the Commission, nor does it indicate that the advisor has attained a particular level of skill or ability. Alpha Star, Principal Preservation Services, LLC, and Principal Wealth Services, LLC are separate and independent entities. Insurance products are offered through Principal Preservation Services, LLC, a Minnesota and Wisconsin insurance agency. Investment advice is offered through Principal Wealth Services, LLC. Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products offered by Principal Preservation Services, LLC. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are not offered or guaranteed by Alpha Star.